Good evening to all distinguished guests. Apologies, I think Alves has not been able to make it. He's stuck on a flight in Hong Kong, coming from Hong Kong. So I'll be stepping in today. And I would love if all the panelists could come up on stage. Niels, yes. So we have a wonderful session before yes, of course. Good to see you, buddy. So we have a wonderful session just before we break up for the lunch break, and we have a team of people that are a great list of panelists and guests across the risk spectrum, just to give a quick context to and set the stage for the conversation. The topic is obviously the Middle East investment landscape and what we've experienced in the past and how we see the future. 2024, the Middle East saw about $2 billion. Middle East, North Africa saw about $2 billion in venture investments, to 44% coming from Saudi Arabia. So Saudi being the bulk of this. And around 2025, we were very optimistic to see a bullish venture capital year. I think just in the month of January, there was about $800 million of transaction, mainly from two companies in Saudi again. So everything was looking towards the positive. And then comes Ramadan, and then Ramadan finishes, and the United States gives us tariffs as an Eid gift. I don't know if that's but we get a global reset when it comes to the international systems of trade. So with that in mind, I'll start off with introducing the panelists that we have today. So we have Niels. Niels is a partner at ASCA Capital, which is a private equity mid-market private equity firm. Then we have Dana with us today. Am I pronouncing that correctly? So Dana is from a venture partner at Leo Capital, which is an early stage venture fund out of the Middle East itself. DFSA regulated?
It's a India-based global early-stage fund.
India.
That operates across the world with a presence in the Middle East.
Great. And so we're excited to hear about that comparable as well. Then we have Courtney Powell, who's a managing partner at 500 Global. 500 is a leading early-stage venture firm out of San Francisco. And then we have Mr. Taimoor Labib. Taimoor is the partner at Affirma Capital, which used to be SC Standard Chartered's private equity firm, about $4 billion in assets under management. So clearly across the risk spectrum and very different markets. So I'm very excited for this. So maybe we can start off just handing it over to all the guests and start off maybe from left to the right. To give a quick, your introductions, your personal intro, and what the firm does for the audience.
All right. So I'm Niels Stidsen. I'm a partner and founder at ASCA Capital. We're a mid-market private equity asset manager based in the DIFC. We are set up about 3 to 4 years ago, and we manage private capital. We raise capital on a deal-by-deal basis. And we do investments here in the region. We've made our first investment in 2023 in Squadwolf. You see the founders are here. Pakistani founded a business here in Dubai, doing very well. And our second investment was when we joined Brookfield in the buyout of GEMS Education last year. So that's what we do.
So my name is Dana Levin. I'm a venture partner at Leo Capital, an early-stage global fund coming out of India, which is operated and run by ex-entrepreneurs and founders. They have collectively started and built 16 startups that are worth now $10 billion. And back in 2018, they decided that they wanted to get into the venture space by helping founders build companies, not just apply capital. And so they started raising their first fund. Now they're on fund 3 that's being deployed. There's $180 million that is currently under management. And the main value add is helping founders scale across different markets and helping with go-to-market strategy specifically for the US market, but also accessing talent in India. In my stories, I actually grew up in the region. I came first time in '89 with my family and have been here more or less ever since. And last 12, 13 years, I've spent a lot of time around venture investing, but also being an operator. So I've seen both sides of the table, and I can definitely say that founders have a lot of my respect because it's always very difficult being on the other side of the table. So it's very exciting to be here.
Hi, my name is Courtney Powell. I'm the Chief Operating Officer and Managing Partner of 500 Global. 500 is a VC firm that started out of Silicon Valley initially, but today invest in more than 90 countries. We're managing about $3 billion, which gets deployed through a variety of our funds from seed stage to Series A, and we've actually just launched our first Series B fund here for the region. I myself actually live in Riyadh, have been here in the region for the past 4 years. We're often the most active investor across MENA and have made about, I think, 10 investments so far this year and about 400 total since we began investing in the region in 2012. 10 of which are our Pakistani investments. So really excited to be here and get to talk more about the future.
Hi, good morning, everyone. My name is Taimoor Labib. I'm the founding partner of Affirma Capital. We were the long-standing private equity business of Standard Chartered Bank, and we did a global MBO on the business 6 years ago, myself and 5 partners. We manage about $4 billion, and we have about a 20-year track record, 110 investments, and exited about 70 of them. We are in Dubai, Joburg, India, China, Korea, and we're headquartered in Singapore. Mostly mid-market private equity, EBITDA businesses of $10 to $100 million and equity checks of $25 to $200 million per deal. In Middle East and Africa, we've invested about $1.5 billion in about 15 companies over the last 15 years. Thank you.
So great. That sets the tone a bit. What is now? This was something I was picking your brains about, Taimoor, earlier as well. But what is the things that distinguish the Middle East, specifically when it comes to and as compared to other markets in the world? You come from the Carlyle Group before in your early days. So how do you see that change?
So my first 10 years of my career were spent in New York and DC with traditional buyout shops and banks, and then the last 20 years in emerging markets. I think when we first started this business, it was quite different. And you could say there was a big difference in sort of Western style investing and Middle East deals. I mean, I still remember 20 years ago, my first PE deal explaining the very basics of sort of PE 101 to a billionaire. There was just no understanding of the business. So we really founded a lot of this stuff as we went through it. So I think now there's a high level of sophistication. There's also the concept has been shown that it works. You can exit through strategics, through financials, through IPOs. We've done all three. And corporate governance is now pretty fantastic across the board. Whether you're talking sort of Saudi, UAE, even Egypt, the corporate governance is much, much better. So I don't think there's that big of a difference. I would say the only little bit of an outlier is I do think, maybe not anymore, but up until a couple of years ago, you could still get sort of say a 5x on a private equity deal in the US based on leverage or something. And here your best case scenario is maybe 2.5, 3, maybe a 4x. So we just haven't had those outsized returns on the PE side. Now I'm sure my VC colleagues will tell me we've had it on the VC side, but so the sort of level of financial engineering isn't quite there. But in terms of the actual companies, they're quite similar. And lastly, I would just say bolt-on acquisitions. It's still quite difficult to do bolt-on acquisitions here on an asset. In the US, I have a friend of mine, he does 5 bolt-ons a year on a single asset. For me to do one bolt-on, it takes me about 18 months. Once I do it, it's significantly accretive to the deal. But that to me is, we're still not there. But I think everything else, it's really quite impressive what's happened the last 20 years here.
Super. And Courtney, what are your views on this, considering that obviously 500 has had a very strong performing comparables to Southeast Asia, and with the U.S. space. So how do you see the Middle East region as compared?
Yeah, I mean, I think it's certainly evolved really quickly, especially in the last, I would say, 3 years. I think keeping in mind that the first VC fund in the region wasn't launched until 2016, we're still very, very, early in terms of venture as an asset class across this region. And I'd say a couple of things really stand out for me. One, the exit pathways for the Middle East are still somewhat limited, right? We've had a few IPOs, but primarily we're still looking at M&A or secondaries if you're coming from the VC world as your primary exit for the investments that you've made. So that in and of itself, I think, kind of changes the way that you're looking at opportunities to invest in. From the founder perspective, though, I think one of the things that we've really seen, particularly when you have a founder who's wanting to expand across the region, they have to have a really deep local competency to be able to succeed in this region. And I think that's only actually going to grow more and more, particularly as Saudi continues to kind of dominate the capital landscape. Whereas I think in other markets, it's a little bit easier to navigate, get to the population size you need to have a really healthy business. Within the US, there's not as much of a distinction between the various markets that you're selling into, which is a very different case to what it is across the region here. I think relative to Southeast Asia, where we've also had funds since 2013, there's some, I think, similarities when you look at the markets of Indonesia and Egypt, for example, in terms of population size and perhaps of nascency. But I think MENA actually long term has an even stronger opportunity than Southeast Asia, given the fact of just the growth overall that we're seeing across the region and the way that the capital markets are developing and becoming much more attractive, particularly not just for the Middle East, but also for African companies, Central Eastern European, and even East Asia kind of coming into the region more. So I would say it's still an incredible opportunity and time to both be an investor and a founder in the region, but definitely you have to have a very strong grasp on the local nuances in the markets that you're building into.
And since from comparing to India, obviously as well, but what about the LP dynamics here? What about the access to capital for venture firms with Leo?
Look, I think the market has significantly shifted over the last couple of years. I think there's a lot more competition for LP capital. Previously, the region still is very active in deploying. You have a lot of the sovereign funds and family offices having a lot of appetite for VC as an asset class, but there's a lot more competition, right? So when previously funds would be competing within the MENA market, now you're competing with best of the best funds from the US. And so it becomes very challenging for regional fund managers to continue raising their capital. And to what Courtney was saying as well, right? The liquidity does not help. There are more and more exits happening on the market, but the outsized returns are still not there with majority of the VC funds. So it makes it very challenging also with allocators that, let's say, have been deploying in the region and are still waiting for the returns, to talk to, let's say, US investors or other markets where the liquidity is still happening. But that being said, I don't know what the market's going to look like in the next, 6 to 12 months, given the current macro sentiment. And I think with the volatility of the markets, even with yesterday's announcement, I think it's great, but when there's so much volatility, I think a lot of LPs tend to wait it out. They want to see how things settle before they start committing. So I think we're going to see there's a lot more competition, but also I think it helps the ecosystem because we're seeing a lot more funds opening up here, right? You have from early stage funds moving from Europe, from Southeast Asia, relocating their headquarters here. But you also have large growth funds now entering the region, which are filling the gap in, Series B and later stage.
Niels, your take from a Danish and European perspective?
I think the Middle East is quite interesting in the sense that we have growth, real growth, population growth. If I look back at Europe, you have declining population. So in that sense, it's an interesting space to be in. But I will echo a lot what's been said by especially Taimoor and Courtney. It's difficult market, very small markets. So you need to learn to master more markets. And doing business in UAE and Saudi and Kuwait and Qatar are very different things. it might not be something that you can actually accomplish. And as a single of those markets might not be big enough to become a big business. I'm sure Taimoor will confirm that there's actually a limited number of very attractive businesses once you get above $100 million investment. It's not something we're seeing a lot of in the VC space. You say it's crowded, and that's hopefully because a lot of companies come up in size, investment size, and come to Taimoor. But before that comes to me, so we're looking at like 15, 20 to $40 million in investments. And in that space right now, we don't see a huge competition, to be honest. It's a little bit of a space where family offices come in, but some founders don't necessarily like to partner with a family. So a professional investor is more of interest. And also because we come with capital solutions that are not necessarily just straight equity or straight debt, but we can do something that might work for a specific company. And I think there's tons of opportunity in that space, but it's a difficult market. You really need to know what you're doing. You need to know the markets. And we're lucky. We were founded by 3 people, all from Northern Europe, but we've been here since 2004, 7, and 9 doing M&A deals. So we've learned a lot in that time, and that's something I think we're benefiting from now. But interesting and difficult is probably the answer.
So deep market expertise and knowledge and being on ground is pivotal.
Definitely. I think when I came in 2009, there was a lot of fly-in capital. I don't think that works. I don't think we see it that much more, to be honest.
Understood. So transitioning to, how was financial year 2024? In your view, in the venture and the private equity space, how would you compare that to the previous years, and how was that in terms of the recovery that we wanted to have? Starting with Courtney and then can come to Taimoor.
Sure. So, I really hoped 2024 was going to be the end of a very difficult cycle in venture, but I'm not sure that's going to be the case. So I'll speak first as a fund manager, and then maybe a little bit on the founder side. But worldwide, it was the lowest amount of venture capital ever raised across VC, and the vast majority were raised by very few firms. So we saw massive consolidation in terms of the amount of, kind of concentration of capital, rather. And I think, the boom that had occurred from 2020 to 2022, when you saw so many new funds come into, fruition, and kind of single fund managers launch, they were just unfortunately, pretty demolished as capital became harder and harder to raise. But I think this year, what you're really seeing, and how we advise our managers and look at our firm, is really taking a moment, take a breath, and really focus on the products, the funds that we're bringing to market. Are they truly tailored to the geographies that we're investing in, the sectors that we're investing in? And most importantly, maybe a little bit to your point earlier, are the capital structures that we're actually investing, do we need to look at anything beyond VC in some of the markets based on, the macros as a whole? Should we be looking at debt? Should we be looking at additional public-private partnerships? So we're really having to evolve real time with these markets. I think from the founder perspective, great companies are always going to raise capital, right? I think we've seen so many different cycles up and down. I think, however, the number of doors that you may need to be knocking on may increase before those companies are able to raise capital. And particularly, I think, right now, you're seeing a lot of people who are really just holding back, right? It's wait and see mode. I hope we get that through that mode quickly. But at least in the US in particular, we're still seeing very rapid capital deployment, very high valuations coming, particularly at seed stage across AI. But even here in the region, we've already made 10 investments this year. So I don't expect a massive slowdown. I think it will be a very difficult time to raise capital as a VC, though.
So I think 24, I would say was an excellent year for us, especially on the exit side. It was a really good year to continue to exit assets. Fundraising has been difficult, I would say, for the last 3 years. And I think before, MENA was a bit out of the global fundraising cycle. I think now we're clearly in it. So I think if the U.S. pension fund sneezes, MENA is catching a cold. And that wasn't the case, 5-10 years ago, because we weren't really on anyone's radar. So I think that has certainly happened. I was actually, in many ways, from an economic perspective, quite excited for Trump's to start, because I thought, we're gonna lower taxes, and we needed, rates would come down a little bit, maybe another 100 basis points, and then we needed a couple big, massive IPOs to be done in the U.S. Klarna was supposed to IPO, a couple other ones on the tech side, and a couple massive LBO ones, because these private equity guys in the U.S. have been stuck sitting on capital for the last 5 years, and the LPs, they cannot give you any more money until they return some of this capital. So I actually, putting aside some of the other issues with the presidency from a financial perspective, I was quite excited. Now it's obviously happened in the last week. Who knows? But I think if we can get a couple big IPOs done in the U.S. and this thing can start moving again, I think it'll be quite good for everyone. I think here in the region, what I'm really keeping on is the price of oil, because as much as we want to say we're diversified, we are still very much linked to oil. Oil yesterday, I believe, hit 60. So let's see. As Saudi needs about 110 to balance their budget. UAE less so, but we cannot have inflation. We cannot be tied to the dollar, and then we cannot be have oil at 50. So this area will also start slowing down. So I don't want to come off coming negative, but there are certainly some clouds here that we need to look past and sort of see where this all ends up.
And I just want to add, I think given the current market situation, I think the public markets always have an effect on the private markets, especially on the venture worlds, and it trickles down eventually. So not immediately, but over a certain period of time. And given the current market sentiment and the IPOs starting to go on hold and companies waiting out to see what's going to happen, early stage is not going to be affected immediately. Early stage funding. Actually, historically, it's been proven that during these cyclicalities, and I don't want to say downturns, but when things are not looking as great, it's the best time to start a company. A lot of great founders have built companies during downturns or, when it was very difficult on the markets. Also, for actually investors, the good news is that you can maybe at some point start negotiating valuations, because if it becomes very difficult for founders to raise, then, the market can correct. And I think especially in Saudi, this is the case where valuations have been very, very high. And, external investors from outside of MENA have had these conversations where they're saying we cannot invest and get our equity share in very early stage companies because the valuations are just extremely high. They do not match the, let's say the current dynamics or the metrics of those companies. So even if things might not look as rosy, I think there's always a positive to it.
Anything to add, Niels?
Not much. That's pretty good.
So just to take that thought now forward, so for financial year, for this year, for 2025, how long does this kind of drought need to sustain? And are the interest rates likely to be, Federal Reserve rates going to be corrected, right? That's what Bessett's pushing for right now. And how long does this need to, and you mentioned this as well, that, it needs to be sustained for crash in the markets for venture, especially early stage, to be impacted. So maybe going down, how long does this need to last for it to take an impact on the Middle East and then on early stage venture?
You mean how long does we need to have good momentum?
No, just the past, what's happened in the past week, 2 weeks. How long does this kind of change or of balance of and tariffs being introduced? How long does that need to sustain? Is it just 1 quarter because we don't see that impact happening, or will it be over multiple quarters? And what would be the the moment that could cause a recovery and see a very great fiscal year in 2025?
Look, I think overall 25 is going to be a difficult year just because of the uncertainty. So I think, let's say the next 90 days are positive and tariffs are only 10%, and tariffs are not going to affect this area as much as other areas of the world, but just I think the level of uncertainty is the biggest issue. I do think there'll be, a rate cut or two. But again, I think anyone who can tell you that they have crystal ball and know what's going to happen, I think it's really difficult. Though, Trump tweeted before he made the announcement, he tweeted out, it's a good time to buy stocks. And so he did well. But I don't know if anyone else was buying yesterday. I didn't buy it.
Yeah, I mean, I would agree. I would say at the early stage in particular, I wouldn't foresee an immediate impact over the next few months in terms of valuations. I mean, fund managers still have to deploy the capital that they have, but I do feel like if we actually enter into a recession, I think that's a very different story where people may, have more certainty that they may need to plan to raise funding a longer period out and therefore may slow down their deployments, et cetera. But I think it's so local. I mean, if we look at Riyadh in particular in Saudi, that market has been largely sheltered from any major kind of macro up and down over the past few years. I don't expect that to change for the early stage immediately. Where I would see that to affect the region would be coming back to oil prices. If oil prices stay where they are, then I think all bets are off. And, 6 months from now, things could look very, very different at the later stage. So I think that's a really important indicator for us to watch.
And what was you mentioned your Series B fund. Was it the lack of US or foreign capital coming into the Middle East that led to this decision?
Yeah, so it's actually been something that I've been really passionate about since about 2020. And, we've had 4 funds now in the region. And in our first fund, which was very small, like 33 million, we made 180 investments, very, very small checks. Today, we have 16 companies that are valued at over 100 million from that 2017 or 2018 vintage. So we were seeing the pipeline develop, and what we were seeing was our founders just stacking note after note after note, not being able to get a lead for Series B. And so we felt really compelled that we needed to be able to ideally lead rounds, not just for our own portfolio, but outside of the 500 portfolio as well. It took me a couple of years to convince LPs that the region was actually ready for a Series B fund. But really, that was it. We felt really compelled by the pipeline. We felt like, we wanted 500's ethos is really investing in the ecosystem alongside the founders. So we wanted to be able to show our commitment to the region by now investing, seed, Series A, Series B. But today we're writing checks $2 to $10 million in Series A and Series B companies, and so we're quite excited to see that take off and feel very strongly about the region.
And what's your take on this transitioning, comparing to India, which was doing really well last year, I think one of the best performing markets, to the Middle East, and how do you find the current year?
Yeah, look, I think it's going to be a very difficult year, like it was already mentioned. I think what I've noticed working with Leo Capital, a lot of the founders in India actually built globally from day one, and they built for the US. And that is something that I have not seen, and it was not a topic of discussion also today on the panels, is building global solutions from the Middle East. I think a lot of founders decide to test and build, let's say, starting either in Saudi or UAE. And I think you have a great testing ground. You have a lot of government support. You have a lot of sandboxes and things where you can, like, from a regulatory perspective, try out. But then I think if you want to reach scale, if you want to, reach billions of dollars of valuation, I think you need to go after the mass markets. And for Leo specifically, as an India fund, they focus on software. Software is still the largest markets is the US, right? So even, like in terms of looking at deals in the Middle East, I think for us it's very important to see, okay, can we shift that mindset? Can MENA founders start building for the world? Because there is talent, right? It's not a lack of ideas or a lack of talent. I think the economy is moving from, an oil-dependent economy to innovation. So the idea is, like, do they have enough capital? Do they have enough support to be able to enter those markets that they thought were completely, like, off the guard for them? So I think that's what we're seeing. And I think a lot of, Indian companies in the portfolio of Leo Capital that are very well performing actually from day one decided to build for the US market from India. And if it is possible there, maybe it's possible in MENA. Although MENA has other challenges as well, because It's very expensive, right? If you want to hire talent, you need to find the right talent. A lot of startups build solutions with split teams. So you might have a management team in the UAE, but then you have engineering or something happening in Pakistan, in India, maybe in Eastern Europe. So the teams, or in Egypt. So the teams are also split across the world. And so there are different opportunities and different challenges as well.
So, Niels, talent and cost arbitrage are important to build a company, and I think that's what the Middle East can offer. Um, you mentioned obviously that you have invested in a company. So, success stories based on such a model, are there any that
Yeah, I think so. I always use the analogy that when I came here in 2009, if you said that a Dubai-based restaurant group would be invited to come to Ibiza and set up, or London, some more people will laugh of you, right? But the world has changed. Dubai has become a brand. People are very interested to move to Dubai. There are all kinds of statistics from UK, Europe, etc. That a lot of people, a lot of young people actually wants to move here, right? And we're seeing that with portfolio companies as well, that you can attract global talent to live here and work from here. It is an expensive place to attract people to, but I think you shouldn't build a business on just saving costs. You need to attract really good people who can develop the business. And if you want to go global, as you were saying, I think you also need a global talent. You can't just sit with local talent and hit the world from here. You need global talent to come in. And luckily, that is the case right now. I think we're, with everything that's happening and with the oil being challenged, I agree, if that goes to 50, we're not happy, and we won't be happy in 6 months. But outside of that, we're very lucky to have some visionary leaders who actually have a plan. If I look back to Europe, US, you can doubt what is the plan. What is it that the long-term view, disability, the trust in the system and the direction it's going. I have no doubt that UAE, Saudi, what direction they're going, right? They want to grow. They want to diversify away from oil. They want to attract talent, etc. And that's a good investment environment for us.
absolutely. And you Squat Wolf as well, I think you mentioned, right? So that's a consumer products company.
Yeah.
How did ASCA, with your founding team, come across a company like Squat Wolf with Pakistani founders based in, I think, Dubai?
Yeah, so it was a funny story. We were looking at another company in the fitness space, and they invited us to something called Dubai Muscle Show, which is a muscle, a lot of muscle guys meeting in the trade center. And it's the first time I've been to one of those events. It's quite interesting. We didn't end up investing in the other company, but we saw this stand with where Squad Wolf was selling their products, and it was packed with people just pulling it off the shelves. And we were like, okay, who are these guys? What are they doing? So we were introduced, and we built a relationship with them over a period of time, and ended up investing in 2023. And so sometimes it's a small world. And back to competition. Obviously Squad Wolf was attractive at that point in time, but there wasn't a lot of people like us out there. If it had been in the US or Europe, there would have been 100 people knocking on their door with our profile, and there wasn't really at that point in time. I think it's more now, and hopefully it will be a lot more going forward. But it's still a very fragmented market, even on the investment side. So if you look at someone like Affirma, I don't know how many competitors you would say you have, but 5, 6, maybe something like that. Where if you're in London, you would have 100, 200, right? So from an investor, we're lucky in that sense that it's not that developed yet.
And Courtney, you've on the early stage side, you've been investing, and 500's been investing for quite some time in the Middle East. So what have been your keys, success stories, and why do you keep doubling down? Why do you keep going to the next stages?
Yeah, I mean, I think at our heart, early stage, seed stage will continue to be a real core of what 500 does. We really like the model of being able to have a distributed portfolio. And I think what we've learned over time, so our first fund started in 2010. And at that time, seed stage funding, really as its own kind of dedicated firm, was still relatively new. You had YC doing things, you had Techstars getting started. And then you had Andreessen and a couple of others who had very kind of small tranches that they were investing in seed. Over time, seed in and of itself has become just such an incredible kind of stage to invest in, but there's very, very heavy competition. So for us, the way we really keep things fresh is by obviously continually diversifying in terms of the markets that we've been investing in, which has been really helpful, especially if you see ups and downs from, a particular region is buoyed by another. But also that sector expertise has to stay there. With 500, one of the things that we're really focused on, we're all operators. So the seven of us who own the firm today all have an operator background. So we have a lot of love and empathy for what it is like to start a company, fundraise, exit a company, et cetera. Keeping that mindset has always been core. But over time, we've really felt the need to diversify into later stages because these ecosystems that we're investing in, they're growing themselves. So as the opportunity progresses, that's when we say, okay, it looks like it's time to put a Series A, Series B fund, et cetera. And as a firm, we'll definitely continue to do that. I think the other way in which we've kind of had to evolve is because we do about half of our investing, 50% of our capital is deployed in emerging markets. The way that we invest in emerging markets has evolved such that we typically will form some sort of public-private partnership. So we will go in with the government and develop not only the funds that we're deploying, but education programs for both founders and investors. We do a lot of policy work and advocacy as well to kind of pave the way for investors or for our startups. And that actually has an impact on performance because you want to be investing into markets where you're seeing kind of world-class investment practices, where the regulatory framework makes sense to be able to see your portfolio perform. So as much as it is on account of us wanting to kind of contribute to these ecosystems, it's also really how we keep performance like front and center and make sure that we're returning money to our investors.
And so transitioning more to how the private equity and venture capital world in the Middle East links to, foreign requirement of capital or the globalization. For the first time in my generation, we're seeing a multipolar world. And the UAE and Saudi and the GCC MENA as a whole has been trying to lure in Chinese capital for some time. Now we have obviously that being more deeply defined. So in the private equity space in the Middle East, what do you see as, the role of foreign capital? Is that going to transition from the United States or Europe to, let's say, Asia or East Asia? Is that something that you are working at your firm?
So look, I think the sovereigns the last 5 years. So if you look at the sovereign wealth funds, yes, so say the Abu Dhabi guys had a head start on the guys in Saudi for a long time. And if you look at, say, we're now at sort of what I call sovereign wealth fund 3.0. So 30 years ago, PIF wasn't PIF; they were effectively just buying U.S. treasuries. Then 10 years ago, they're buying big stakes in Uber and publicly listed companies in the U.S. and finding their way. What they've done the last 5 years has been brilliant, which is basically investing into their own ecosystems and telling GPs, if you come invest here, we will give you money. And they've done it at our side, they've done it on the VC side, they've done it all over the place. And I think it's been a fantastic strategy. And without them, I don't know how a lot of these PE and VC firms would have done because the funding had dried up globally. So I think from that perspective, they've done a fantastic job. Where they've struggled is getting the international money in at scale here. And I think they need to help people. They need to, if Saudi can announce a massive exit for a big, for a Blackstone or a BlackRock, a few hundred, a couple $1 billion on an IPO, et cetera, I think that will really sort of open things up. Or as you were alluding to, maybe just go straight to China and other markets versus sort of waiting for the Western money to come in. Because I think what's definitely going to happen continuing is capital globally is just not there as it was when rates were 0%. So you have a new world where you just have to be sort of aware of that. So even if the US and Europe wanted to invest more here, they may not have the capital. But to your point, maybe you bring in China and other groups who are are more flush with cash, and and China is also going to make an investment not just on a economics perspective. It's going to be everything else, Silk Road, et cetera, et cetera. So I think that could be a good way for them to get foreign capital in.
Clear. So with that, maybe I'll go back to all the panelists, starting with Niels as the final round of question. What would be, if you were to explain to the audience, especially those that are new to PAC launch or new to the Middle East, what is this market and why are you here? What makes you stay here? What makes you keep investing? And to the founders as well, if you have a message on to your founders or people that you've invested in.
Yeah, no, I'm staying here and I'm investing here, so that's reality, and I think it's very interesting because it is I'll compare it to Europe in the 60s. I didn't live back then, but it was there was a momentum shift in what people were doing. There was a lot of companies being started that turned out to be successful and kind of the bread and butter of the European economies. And I think I'm seeing a lot of the same here. The VC environment is obviously, as you say, crowded, but it's crowded for a reason, because a lot of people are starting businesses and they will be successful and keep developing this region as an investment hub. In the end, we do see a lot of the global people, dipping their toes here. It is still a small market. There's not space for very big money. Hopefully there will be in the future, but for the next, until I'm retiring at least, I think you'll see a developing SME sector with very interesting investment opportunities coming up. And it's been a long time underway. I said I've been investing here and doing deals for 16, 17 years, and it wasn't like this in the beginning. But now I definitely see that the talent and the companies are coming, and they will come. They will mature and grow and attract bigger money as well.
Look, I'm biased because I grew up here, so I'm staying here. But I think the region is full of opportunities. At some point, with my family, we were thinking if we go back to Europe, but then you see what's happening in Europe and other markets and, the over-regulation. And I just think there is so much support from the government here to really make this a digital-first economy to be, the best, to innovate a lot. So I think not only capital from the sovereigns and from top down, but also from the governments being, very active shareholders in the ecosystem, not just building, investing, but, actively competing with the private sector. It is really pushing the economies in the region to be very competitive. As you have seen in the last couple of years, UAE has undergone such a shift where you have talent, very high-end talent and very high net worth individuals moving into the region just because of what's happening, let's say, due to Brexit, due to, tax regulations in the UK, due to, the wars. So the region somehow always benefits. And I think if you're a startup building, start spending more time here, because if you want to expand here, you need to be very local. You need to find the right talent. If you want to raise here, you also have to be on the ground. You cannot just fly in, do some pitches and then hope to raise money. You need to have either teams on the grounds, show revenues, show potential. But I think there is a lot of growth that's still going to come out of this region.
I mean, I couldn't agree more. I think if you take a look around the world, the Middle East in many ways continues to be a bright spot. And I think it's really important that we keep in mind maybe the time span that we're talking about. Do I think everything is going to be perfect 3 years from now? I think we'll be on the way. But I think if you look 10 to 15 years in the future, that's where things really start to get exciting from the financial markets perspective. 500, has been here since 2012. We're going to continue to invest in this region, in Pakistan, and all over. I'm raising my kids here, so I definitely, feel very strongly about the region. And I think, maybe a little bit on the VC side. If I was a fund manager today and looking at investing across kind of MENA-PT, I would be very focused on finding what a unique value add is that I can bring, and not in services. I think that we're seeing a few more sector-focused funds come into the region, and I think that's fantastic. They're smaller funds. They can tag along on the larger deals that are being invested right now, and I think that's actually a real value to founders. So that's something when I talk to fund managers thinking about the region that I often tell them is any sort of sector expertise, really, really niche, competency and skill set continues to be exciting, as a VC and as a founder who's looking to raise capital. But yes, very excited about continuing to invest in the region and in Pakistan.
So I'll just throw one more, is because you mentioned sector specific, is AI and blockchain were at an inflection point, but the only agenda that the world is united on is climate change. So it's climate change. It's very personal to me. It's a personal question. So is 500 doing something, and are the other firms doing something on climate as well? Is that something that you see as having value in the material?
Yeah, so it's definitely something we've been looking at activating over the past year, and I hope to have an announcement very soon about that. But what I can say is, for our angle, when we think about energy transition and kind of climate change, et cetera, our lens is going to have the global South view. And we think from an opportunity perspective, the global South is really what's going to face the largest impact of any potential climate change, but actually has the fewest resources going into that opportunity. So for us, whether we're looking to do a fund or kind of programmatically build, it will certainly have a global South focus. And we're really excited about what's coming on that front.
So similar, to just add to Sovereign Wealth Fund 3.0, there's now 3 or 2 sovereign wealth funds only on climate. So, and sustainability, energy transition, electric vehicles. There's a policy for everything in the Emirates and Saudi Vision 2030, etc. Is that also something to add to your answers?
So on that, we really haven't done much in that space. I probably wouldn't be the best guy to answer that, but I think all this stuff is very accretive because, I think the West, they look at this climate change as, in a very binary way. But here and in Saudi, any extra oil you can export is a benefit to the country. So it's sort of a double positive. So I think just intellectually, it just makes a lot of sense here that they should be doing these things. On being here, yeah, I think as the panel said, this is exactly where we want to be. And on message to entrepreneurs, I just think, hang in there. Your job is much harder than ours. And the only thing I would just say is, I always tell people, always ask yourself, where are you in the cycle? Because you could have the best idea in the world, the best business. If you're in a bad cycle, it's not going to matter. You could have a very bad idea in a good cycle and you'll be a billionaire. So much of this is a little bit of luck and patience and cyclicality. So, if you are having a tough time, just be very honest with yourself. Where is this cycle going, and do I have the run rate to continue or not, or should I be doing something totally different? Because I do, honestly, I do think their job is harder than ours.
All right. So thank you very much, and thank you to the audience for waiting patiently. I believe, thank you everyone. And lunch is lunch.